Hello, everyone. Welcome to today's podcast. This is iPlanGroup's first ever podcast, and we have a very special guest on today. We have Gregg Cohen. He is one of the founders and the CEO of JWB Real Estate Capital. I'm very excited to have Gregg on today. What Gregg and his company do is they help their clients achieve passive income through investing into a portfolio of turnkey rental properties. Right now, these guys, they have over 400 clients. They're in 42 states, 13 countries. That's where their clients are. They started in 2006. They just celebrated their 10th year in business. At this point, they've purchased over 2,500 investment properties in the Jacksonville, Florida area. They've renovated over 1,500 properties. They've built over 400 new construction properties, and they currently manage 1,300 properties for their clients. We have many mutual clients, so I wanted to really bring on an expert in this field of turnkey rental properties, and couldn't think of a better guy to bring on to our first podcast. Gregg, thanks for having us. I really appreciate your time.
Absolutely, my pleasure. I'm really looking forward to being a part of this, and I've loved being a client of iPlan as well. So I'm looking forward to sharing what we have been up to and seeing how I can help your other clients as well.
Excellent. Well, just to start, can you give us a little background on you? Where are you from? Where'd you grow up? High school, college? What have you done throughout your life experience? We'd love to hear about you a little bit.
My story, probably the most interesting part for this conversation, starts when I was in college. I went to the University of Florida. I've grown up in Florida most of my life. I remember being in college and being very much of the mindset that I wanted to get a corporate job. I thought that was my path, which is ingrained into most college-age people, I would say, and so that's the path that I originally went down. And I started to work, a big company, and that was my first job out of college. That was one of the best things that ever happened to me. Number one, because I had a horrible experience, and had I not had that experience, I almost for sure would not be doing what I'm doing right now. About a year into it, I decided that that path wasn't for me, and so I read a book that hopefully many of your listeners have read. If not, you should definitely pick it up because the book changed my life, called Rich Dad, Poor Dad. Have you read that book, Matt?
I have, absolutely.
It's the foundation, right? It teaches us the fundamentals of investing in assets that pay for themselves, and I became infatuated with that idea. I became addicted to passive income, and the way to do that, in my case, has been through building a portfolio of rental properties that cash flow. By cash flow, I mean they pay for themselves every single month. And I always thought of this as I always thought of it as building up an army of income-producing assets. And whenever I would go and buy an investment property, buy a rental property, I thought of that, inching my passive income up, a couple $100 a month, a couple $100 a month. And the more properties I would buy, at the end of the day, for me, it was about controlling my time. And that's what you're able to do when you buy the right asset that pays for itself every single month. That was 10 plus years ago now, and I've been really blessed to be a part of a great team here. We're located here in Jacksonville, Florida. The name of our company is JWB Real Estate Capital. It's been an incredible journey. Started with that book, to be quite honest. Had many friends and mentors along the way to help us grow, and now we get to do that for others as well, and specifically helping our clients build that same type of cash flowing portfolio. That's what our passion is. That's what we aim to be the best at.
Amazing. So it sounds like you really took the bull by the horn and really ran with it. What would you say was, your first deal, or, how did you get into real estate?
Well, I came from a background of having no real estate knowledge for myself or for my family. It's funny, as I was leaving my past career, I remember, everybody on my way out, I remember people mocking me that, oh, this guy is going to go chase a late-night infomercial dream. And I used to watch those late-night infomercials. Those are always pretty funny. For me, this business, well, this was really a business. It wasn't a hobby. It was something that I saw, our team really saw, my business partners, and I saw a lot of inefficiencies in the marketplace in terms of creating a passive income portfolio. For most people, when they go and buy rental properties, it's a pretty inefficient process, right? They might work with a realtor who, the process of finding the house usually takes a lot of time. You have to send in multiple offers. You have to go on a lot of visits. It's a pretty inefficient process. And then when you get the property, well, then many times it needs work done to it. So then you got to work with a recommendation of a contractor usually comes from that realtor. And the unfortunate thing is that realtor and that contractor might not speak the same language because they do have a different agenda. Hopefully, and the budget isn't too much over by the time you get done with the renovations, but then you got to go find the property man. And maybe they don't speak the same language because they aren't incentivized the same way. Maybe the real estate agent on the front end who was putting the evaluation together for the deal, expected that it would rent out for $1,000 a month. But by the time you got to the property manager, they said, "You're crazy if you think it's going to rent for more than $900." And so there's all of these pitfalls along the way for investors. Usually why people are kind of drawn away from rental property investment. It's too hard for most people. There's too many variables, and it's not something that's as easy as the stock market to get into and to hit goals. For us, that's really what drew us to this very systemized approach to creating a passive income portfolio where you have everything under one roof. And I'm sure we'll talk a lot about what Turnkey is. Obviously when I'm talking about everything being under one roof, I mean that real estate agent component, that the contractor component, the property manager, they're not spread out with different agendas, with different goals in mind. In a true turnkey operation like we have, those people are all under the same roof. They all speak the same language and they have the same goals in mind, and they're tied to your return goals. So that was what really attracted us from a business model perspective and said, well, this is something that we feel like we can create a really great niche for ourselves and really serve our clients well. That's what we have tried to do over the years. It's been a fun journey to continue to get better and better and better and better and see our clients' passive income numbers go up as well. That's what we really get a kick out of.
So you're keeping it all on one page, it sounds like it's what you're saying, and that probably adds up to better investment in the long run, I would imagine. Well, let's actually, you mentioned, turnkey rental properties, and that was my next question is, what exactly is a turnkey rental property investment for those that are not familiar with the concept?
Yeah, I think it's great for us to kind of break that down a little bit more. In our little bubble here, we throw the word turnkey around when it comes to rental properties quite frequently, but it's a relatively new concept for a lot of folks. At the end of the day, what a turnkey company is trying to do is, and what we're trying to do for our clients is to help clients invest in an income stream, in an asset class that's consistent, right? That's as consistent, it's consistent enough, right, to hit your goals here. That's what you get with rental properties, right? You can get into an asset class that's consistent. That's usually lacking in the overall gamut of choices that people have when it comes to investments. Most people feel like they have to invest in the stock market, right? But there's variables there. It's up and down. It's emotional. And so people are looking for an alternative. So a turnkey company allows people to invest in an asset class like rental properties, but it makes it a hassle-free process, right? So a lot of those hassles that I described with finding your own realtor, finding your own contractor, finding your own property manager, making sure that they speak the same language, that they're held accountable to the same numbers. When you invest with a turnkey company, that's all done for you, and you're able to sit back and collect what we call mailbox money, right? Collect your monthly rent check. It's direct deposited into your account every single month. So you're able to invest in an asset class that's really consistent without the hassles that normally come along with something like rental properties, and that's all about what a turnkey company is.
Okay, let me ask you this, and you kind of covered it. Why did you start JWB? And what I mean by that is, what turned it into primarily a turnkey rental property investment?
So when we started 10 years ago, I think anybody who starts a company can tell you that they knew exactly what they were going to do when they were starting is probably not telling you the entire truth, and we were no different, right? I mean, for myself, I have 3 business partners, and 10 years ago, we did not have much knowledge in real estate, and we didn't have much knowledge in business in general. And so what we learned over the years was we wanted to focus on the things that we're most passionate about and the things that we felt like we could do a very good job on based on the market conditions. So it's funny, as you go back on our company history 10 years ago, when we first started, I think like most businesses, you're really trying to survive, right? You're probably a jack of all trades and a master of none. And there's nothing wrong with that. That's what a normal way of starting a company feels like. And then over the years, we really found our niche. And we found that, we, of course, are really passionate about building a passive income portfolio for ourselves. And so as we started to do that and develop it more for ourselves and have our own money in these investments, we learned how to do it the right way. We learned what mistakes to avoid. And then more and more friends and more family and more referrals of our relatively small client list back in the day started asking us to do it more for them. And so we just paid attention to the things that seemed to be working really well for us. And, probably 2 years into the business, we said, well, geez, this is what we're really built to do. This is where you kind of have that convergence of, how does the leaders of the company, how does your mind work, right? What are you just kind of wired to do well? And then you converge that with what is the market built for? And in Jacksonville, Florida, it's a great market for cash flowing properties. We have low prices and high rents, which is a great thing and truly one of only a handful of markets in the country. And so, when you kind of got to the meeting point of that, we said, well, this is what we are going to do. So what we did is something that most companies, I think, don't do. We made a commitment to ourselves and to our clients that we said, this is the one thing that we're going to do, and we're going to be the best at it. And we're knowingly going to give up other opportunities to maybe have other revenue streams outside of turnkey investment properties because this is the best thing for our clients and for ourselves. So that's all we do. We are 100% focused on turnkey rental properties. We only do it in Jacksonville, Florida, and really that's by design. That's a strategic thought because at the end of the day, I think people take for granted as a business how hard it is to be great at one thing, right? And so when you have the opportunity to be great at one thing, it doesn't mean that you're going to be great at everything, and it's really our approach is if you try to be great at everything, you're not going to be great at that one thing anymore, right? So we're high.
You got a laser focused, sounds like.
Absolutely. And, that's probably the biggest aha moment that if I could, attribute our success and our client success to one thing, it would be that aha moment, however many years ago that we started saying no to everything else and rallied our entire team around becoming the best turnkey rental properties in the Jacksonville, Florida market.
Interesting. So you mentioned you have partners. How did you meet your partners, and how do you work so well together and keep things running smooth?
Yeah, it's just a blessing to be a part of a partnership that's flourishing after 10 years, right? I mean, that's pretty. I always like to say, I've been through the war with my business partners because we had very, very humble beginnings, right? This was not something that was served up to us on a silver platter, and I'm perfectly happy to share some of the tough survival stories in the first, year or two, right? Those are the moments that really forge trust and confidence, and so I think that was an amazing experience. But if you go farther back than that, one of my business partners has been my best friend since high school.
Really?
Funny, yeah. Funny story, actually. The way I got to know him is I was in high school, and I have a younger sister who is a year younger than me, and the way I got to know my business partner is he was trying to hit on my little sister, and that's how I got to know him.
Very serendipitous, if you ask me.
I know, right? I know. So we've been best friends ever since. After that, obviously. So you have some of those life experiences where you just can't possibly recreate that. My two other business partners had a somewhat similar experience. They weren't hitting on each other's sisters, but they went to college together. They actually used to work together. They were in the restaurant business together before. In some of those formative years, how you see how people act in good times and in tough times growing up, and that's probably the foundation for who we are as a leadership team. But then again, we have the benefit of working together for 10 years in business as well, and in being there in 2006 when the market was on fire and things were going up at an incredibly high pace, being there in 2008, in 2009, 2010 when the opposite was happening, and understanding what we needed to do to take care of our clients and to take care of our business, and being here now where the tides are really turning more towards rapid growth in terms of real estate again. So navigating all of those waters, being able to rely on those times, I think there's just no substitute for it. So I feel very, very blessed. I think there's no simple theory or a simple path to follow to find the right business partners, but when you find them, you got to continue to invest in that relationship. That's what we try to do.
So would you say it was just a natural kind of thing where you got along, or was it because you knew each other before? What What would you say is that key component to making that work?
I think at the core of it, the reason why we work so well, if you think about just the raw amount of the numbers of business that we've all worked together on, meaning, the number of clients, the number of transactions, the number of great things that have happened, and the number of challenges and struggles that we've had to figure out over the years, it's truly mind-blowing. So, there has to be, a core reason why we continue to be able to work really well together, and why we're excited to do it for the next, 100 years or whatever, right? As I think back about it, I think at the core of it, we know that we're not going to agree. We know that we're going to fight like brothers sometimes when we're really passionate about certain things, which certainly happens, right? But we all four of us have a common belief that, that we check our egos at the door, and that whatever we're really passionate about at that moment, it's not an egotistical, it's not that I'm right. We really believe it's the best for the business. And I think when you can separate your ego from what's truly best for your clients or best for the business, then you allow yourself to be wrong a lot, right? Gotcha. And you got to be comfortable with that. Yeah, well, it's learned. It's a learned skill, I'd say, over the years.
Right.
I just think we try to check the egos out the door, make objective decisions based on numbers, and allow ourselves to be wrong. Everybody has a turn being wrong on my team, right? But we have a 4-person decision-making body, and that allows us to be able to make the right decision overall more often than not, right? And still not always go in one person's direction. I think that's served us pretty well over the years.
Nice. That is great advice. So Gregg, switching gears here a little bit, back to the actual investment itself. Let's say, start to finish, you buy a house. How long does it take your company to purchase, rehab, and rent a property on average?
So, well, let's talk about from a client's perspective, right? Because one of the reasons that clients will go to a turnkey operation rather than to do this on their own or kind of piecemeal the team together is because you're busy, right? You may already have a full-time job, or you may be active in some other field, but building a rental property probably isn't your full-time job, or you don't want it to be. Being a landlord isn't your full-time job, or you don't want it to be. So when clients come to a turnkey operation like ourselves, it's really beneficial for them to be able just to make a decision based on the numbers and then be able to purchase that asset. And if you work with the right turnkey investment property company, then they're going to have inventory on hand, which has already been renovated, already been rented, for you to be able to purchase at any time, right? And so when a client would come to us to be able to purchase their portfolio, of course we're going to take a few phone calls and get to understand, the right expectations of the investment. But when we get through that, and it's they're ready to purchase, there's no waiting. They don't have to go on a waiting list and wait 60 days or 90 days. They don't have to send in multiple offers. It's a very direct decision. They can make decisions based on the numbers and then buy their portfolio, whether that's 3 properties, 7 properties, 10 properties, or 1 property. Whatever that right number is right off the bat, they can make that decision right then. And they're renovated or newly built. We do build new homes as well with leases in place. And so that's a big benefit there.
Absolutely. You can't beat having a brand new home to rent out. That's incredible.
Yeah, it's a lot of folks are kind of surprised, but you can find new construction rental properties when you're in the right market, obviously with the right team. So that's a pretty cool concept that not a lot of folks know about.
So that brings me to my next question. And other than the new builds, I know every market's different, but where does your inventory or distressed properties come from? Or what are your top 3 sources, I guess you could say?
So, and that's a great question. And if you had asked me that question 8 years ago versus 2 years ago versus today, you would have received very different answers. Today, our main source comes from our networking in the community, right? We're the biggest buyer in Jacksonville. We'll buy over 700 houses this year. And after being in a place for 10 years and buying over 2,500 properties, people know you. So we have obviously an advantage that comes to acquiring. So about 40% of our inventory will come from our relationships in the community. And about 40%, maybe a little bit less, if this is trending down, will come straight off the multiple listing service. So this is where normal people might say, oh, I'm going to go buy a foreclosure. They make offers on the multiple listing service. we do that as well. We're just extremely quick, and we can always close very quickly. So we still do get 40% or a little bit less than that, as that number's coming down there. And then about 20% of our purchases come from what we call direct seller marketing. So these are things like, direct mail to owners that might have a reason to sell at a discount. If they own a house that has a lot of repair work necessary and they don't want to do the repairs to be able to sell it. So obviously we can take care of that and buy it from them. And so we have lists that we mail out to, and we do a lot of other marketing channels as well. But those are really the top three. If you go back, 8 years ago, everything we did was direct to the seller, right? Because this was before there was a lot of, before there was a lot of inventory on the multiple listing service, before there were a lot of foreclosures on the marketplace, then, we need to be able to locate our own properties. Couldn't just go to the multiple listing service because 8-10 years ago, everybody was buying off the multiple listing service and prices were too high. A no competition acquisition strategy, right? So that's what we used to do. Now, in order to find a no competition acquisition strategy, you have to spend a lot of money to do that every single month, right? So our marketing budget was a lot higher 8 to 10 years ago, right? Then, if I'm fast forward to maybe 2 years ago, everything we bought was on the multiple listing service, right? Why do you think that is?
Foreclosures.
Yep, there you go, right? This was before we had really seen the uptick in the competition on the multiple listing service, and so that we were able to buy as many as we could handle 2 years ago, 3 years ago, 5 years ago, and so that's what we did. Now, because we had been through this before 10 years ago, we knew that the market was coming back. We said, well, we need to make plans that we need to be able to scale back up in the other direction if we need to. So that percentage of purchases has come down, in terms of on the multiple listing service. Used to be 100% or very close to that 2 years ago, 3 years ago. Now it's about 40%. And we're going to continue to see it come down even more. So that's kind of one of the beauties of our business and real estate in general, right? We've been through every type of market. I've owned assets in every type of market that we've seen, since 2006. We've seen both ends of the spectrum, right? It's, for us, as long as we can see it coming quick enough, we are able to just to pull a lever in a certain direction and make sure that we're ahead of the game for our clients and for ourselves, so that experience has really helped us, because real estate's never the same from one year to the next. It's a fluid thing, but going through that has, really prepared us for what lies ahead, really.
So obviously you guys are just in the Jacksonville market. What makes that market so good for real estate investing, would you say?
Well, so, there's only a handful of markets across the country where you can find this phenomenon where you're able to buy an asset and the rental income that comes in is going to more than pay for itself every single month. If you total up what your mortgage payment will be and your taxes and your insurance and your property management fees and expected maintenance and vacancy costs, you total all that up. If your rental income more than exceeds that, well, that's what we call a cash flowing investment, right? That's pretty hard to do in a decent neighborhood in markets across the country. I mean, if you're in California, good luck. You're never going to be able to do that. If you're in New York, good luck. You're never going to be able to do that in a decent neighborhood. Not surprisingly, that's why the majority of our clients come from California, right? There's only a handful of markets across the country that have these fundamentals, where you have low pricing and high rents, right? If you're just in that, sample size of just those markets across the country that have those fundamentals, it's even more rare for you to be able to find one which has a very strong economy, right? A lot of times those markets are tied to maybe one employer in the marketplace. So as a turnkey model, that creates risk, because what if that employer leaves and all those jobs leave with it? What does that do to rent rates, right, and occupancy percentages? That would take a hit, Jacksonville obviously is not that way. Our number one employer is the military. We have 3 Fortune 500 companies that are here. We have new businesses moving here every single day. In fact, Amazon just announced plans for a distribution plant that will bring 1,500 jobs over the next few years here to Jacksonville, which is a huge win for Jacksonville. It's the largest number of jobs in a single day that's ever been announced in Jacksonville's history. And so, you know, you don't have that same risk profile, but obviously you still are able to get the returns from the low prices and high rents. And then the last point, and the reason why, you know, I believe Jacksonville is the best market in the country for cash flowing portfolio is because out of that handful of markets, one thing you normally need to give up is the potential for growth, meaning home price appreciation, right? Normally, those markets are in the Midwest, which are slow growth or no growth. Populations are not normally growing in a lot of these markets, and population growth drives future home price appreciation. Jacksonville is what I believe to be the best of both worlds, where you get those strong cash flows, but you also have historically above average home price appreciation. And so you're able to take care of today, which is what your cash flows are. You always need to buy assets that pay for themselves every single month. But the way we look at it is by holding on to these assets for 10 years, 20 years, 30 years, however long you want to hold on to them, over time, over the long haul, there's a good chance that you'll see a higher growth percentage here than you would in other parts of the country, just based on historically what has happened. And many times, real estate markets tend to repeat themselves. The cycles tend to repeat themselves. So you guys get a nice little bonus from appreciation. Not something that we bank on, but certainly something that can be pretty impactful to a portfolio over the years.
Nice. So, I mean, do you plan on ever expanding into any other markets, or is that, you know, to be determined?
Well, you know, remember how we were talking about trying to have a singular focus and trying to be the best at one thing. You know, we get asked all the time to go to different markets to expand. A lot of turnkey companies do this. And our approach is that there's a tremendous risk in doing that to our clients. Could it be done? Sure. Could we take our model and plug it into a different market? We could, but we love what we do here. We love our 10 years of relationships that we've built that really make this possible, whether it's with our hundreds of contractors in our network or the folks that, you know, provide properties to us that, you know, that strong, you know, the strong relationships we have that account for 40% of our acquisitions. We love our team here, right? We have 50 people in office, a dynamic culture that has really, you know, it takes 10 years plus to really build that. We just think that, first of all, we don't need to leave Jacksonville. There's more than enough opportunity here. But more than that, this is where we want to be. This is what we can do to be the very best, and we're not going to sacrifice that and that goal of being the best at what we do just to go to another market because there might be a little bit of opportunity out there. So we're really laser focused. You might call us a little bit weird or different. You know, I never say never, but I can tell you that we have no plans to expand to go anywhere else except Jack and to only stay in Jacksonville. That's where we see the best fit being for ourselves long term, and, you know, for our clients. And then, you know, personally speaking, you know, I have a beautiful wife and 2 young ones at home. I have a 4-year-old little girl and a 2-year-old boy, and my business partners are similar there with just young families and whatnot. And, you know, we really value, you know, our relationships and what this business has become over the years. And it just doesn't sound fun to try to recreate it somewhere else. I mean, it might kind of sound kind of simple, but, you know, we built this thing to be fun, to enjoy coming to work every single day. And man, is it hard work to be able to build something like this, you know, in another market. It's just not as easy as,
sure,
you know, some people might think it is. You know what I mean?
Yeah, totally different circumstances. So I'll piggyback on that. And where do you see your company in 5 years, 10 years? What's your mission? What are your goals, your vision and your goals?
Well, our mission statement is to change people's lives. Quite simply, we want to use this, you know, this concept of building a portfolio of passive income for folks to help them change their lives. You know, that's what our mission has always been. It's not just financial to do that. Here's a pretty cool story, actually, talking about what our mission is. You know, every quarter I stand up for our team and we talk about how we did as a quarter, and we talk about how it ties to our company mission. Well, you know, this last quarter I was standing up and preparing for the presentation, and I was like, you know, let's think about all the things that we do that don't really factor into the dollars and cents of the income that our clients are earning off these investments. What are some of the ancillary things that we do? One of the things that we do for new clients that come on board is we always fly our new clients in to come and meet us. We do this on our own dime because we think it's important for a face-to-face connection, because we expect to be a big part of their overall financial portfolio, and it's something we really enjoy. And so I had 2 clients that came in, I guess it was one of the campus stores maybe 2 or 3 months ago, and they brought their kids with them. I thought this was really cool. One of the kids was about 11 years old, and he was coming down because his dad had always taught him that if he had one regret in his work life, it was that he wasn't buying turnkey rental property sooner, or he wasn't buying passive income rental property sooner. And so that was one of the things that he told his son, hey, listen, I want you to learn about this because this is going to help you own your time quicker. So his son came down and was a part of the tour and wrote us a letter afterwards saying how this tour really helped change his life. He said it wasn't just about seeing the properties, but it was about seeing the type of organization where people actually like going to work and like working with the people that are around them. And he kind of picked up on that. And he said, well, this is something that, you know, I want to do in terms of owning my own rental property portfolio, but one day I'd like to start a company. I don't know if it'll be in the same type of company, but I want it to have that same type of feel. From an 11-year-old kid. Credit to him and his dad for imparting that into him. But what 11-year-old kid goes on a cross-country trip to go and look at properties, right? It's a pretty special guy right there. So, you know, that's what we're really focused on. It's not just the numbers here. It's about how do we accomplish that mission. You know, specifically, where do I see us going? You know, we have more than enough opportunity. I usually think 3 years out. I think thinking anywhere longer than 3 years out is kind of a waste of time almost, because, you know, the whole world changes in 3 years, you know. So we think 3 years out, and looking at where cash flows are today and looking at the inventory that we can provide for our clients, we're going to be solely focused on turnkey rental properties for the foreseeable future. I don't see that changing. Ultimately, what we will see over time is we will see prices go up. Rents are going to stay consistent, though. Rents are not attached to prices. They're not directly correlated. So overall, you will see that returns on cash flowing properties in that portfolio will come down, just like you see returns today are not as high as they were when prices were lower 5 years ago. What you're able, you know, what we're focused on is those returns, keeping them as high as we possibly can for clients, and that's going to be doing for the next 3 years. So a lot of my responses might sound simplistic, but that's kind of our motto, right? Be the best at something, don't complicate it. And we've looked and kind of analyzed the inventory, and we feel very confident for the next 3 years this is going to be our focus. And then, you know, after that point, we'll have to do another podcast, Matt, and I'll tell you where we're going after that, all right?
Absolutely. We will do one for sure. So just a couple more quick questions for you here, and I know you're busy. We'll get you on your way, but what's, you know, you obviously have many jobs going at once, I'm sure. How do you keep a job on time and on budget?
Yeah, that's a learned skill. You just have to have a tremendous number of jobs that go off budget and off time for many years, I think, until you learn it. I don't think there's a simple way. You know, I'm kind of joking here, but experience is a great teacher, and relationships are crucial. That's part of the reason why we're so focused on staying in Jacksonville, is because we realize, and we've seen over the years, how we really have refined and gotten to a point in our business where we do have jobs that come on time and on budget. Here's a pretty crazy stat. All right, so for us to buy the number of houses that we buy, you know, 700 houses is what we're on pace to buy this year. We see every single property before we make an offer. Right? We are not out there just sending offers in blind. That doesn't work for us. Right? Maybe for some other types of businesses it does, but it doesn't work for us. So a person on our team goes out there and looks at every single property. Now, this guy's name is MJ on our team, and MJ goes into every single property. In about 10 minutes, he'll walk into a house, and he'll come up with a number of what's needed to be repaired. Now, of course, he's going into these houses. These are the ugliest of the ugly houses that you can imagine at this point. They don't have roofs. They need serious plumbing work. It smells bad in there, right? And he goes in about 10 minutes, he walks out with a number and a line item. He knows exactly what we're going to be able to, or what we need to pay to get this into the shape that we need for a long-term hold for our client. Our average renovation is about a $35,000 renovation. And so he does this 50, 75 times a week. That's how many offers we're going to make on a normal week. And so whatever number he puts down there is incredibly important. There's a tremendous amount of trust that we put in MJ and that number, because without anybody else seeing it, from our leadership team, we make an offer based on what that number is that he put in there. And then we send in hundreds of offers each week, right? So we actually track what's the percentage from the time that MJ makes that estimate to 3 months later after the property's been purchased and renovated. How close are we getting the actual budget? Would you believe that there are quarters where MJ is actually within 0.5% of that number?
I can't tell you that I would believe that. That's an
Right.
incredible number.
Because I didn't believe it when at first too, right? I mean, 10 years ago when we were doing this, we used to track this as well. We were at like 14%, right? And if anybody has tried to do this themselves on any number of jobs, 14% might not even be, might not sound that bad, right? I mean, it's a known thing when you're starting in this business. Jobs are going to go over, right? It's unfortunate, but that's a part of the learning process. So through 10 years of, MJ's been on our team for 7, right? And him developing and becoming an expert in this. And then our contractors, and we know exactly what we need to pay each contractor, line on pricing, all the way throughout. This entire process, 10 years is, of getting better every day really allows us to be on time and be on budget there. But, that number there is one of the biggest metrics of success for us, because when we see that number come in, that means that MJ is going to be quicker than everybody else, and that our offers are going to be quicker than everybody else, and then we're able, that process repeated time and time again allows us to be able to do the volume we need to do, and we need to do that volume to keep our clients happy, right? And so that's
very cool.
One thing we focus on there.
Yeah, I suspected you'd say you had an employee that went out there and that was their specific, job, their laser focus. I would have guessed that. So 3 more questions, and we'll just breeze through these. But I'd like to know what would you say drives you to succeed?
For me, it's time ownership. I started to get into this because I always I wanted to own my own time. And in my previous life in corporate America, I realized I was never going to own my own time that way. For me, I do this because I love to spend time with my 2 kids. And as we continue to build up our portfolio, that's what I would equate it to. Every time we bought a rental property, I looked at that as, hey, that's another step towards being able to spend more time with my kids when they're going to baseball games and and my daughters and dance class and whatnot. So that's what I do. And talking with a lot of our clients, they have similar goals. A lot of it does revolve around time ownership, and that's what drives me.
Excellent. Then that leads me right into my next question. Do you teach your family or your children to invest, and if so, please explain.
Yeah, well, my daughter's 4 and my son is 2. So okay. Right now we're working on timeout for my son. So
a little young for investing.
We're going to take baby steps. No, but actually it's something that I'm very passionate about. One other thing about rental properties that I love is it is a beautiful, little business in and of itself. You have to understand income. You have to understand expenses. You have to make sure you have enough cash in your bank account to be able to make the payment every single month, right? And you have to create this financial education, this knowledge. You can do that through an instrument of just managing one rental property, right? And so as my kids continue to grow up, it's something I'm really passionate about. We're going to sit down and say, okay, well, here's the money that you made this month. Should we spend the money on this now? Should we go out and buy something fancy? No. How about we make this decision to invest this in something else? And my daughter already loves jewelry, so I'm certain that she's not always going to agree with me when she's 8 or 10 years old. But I just think that foundation is really important. So I will it's something I'm pretty passionate about.
Excellent. And I got one last question for you, sir, and I appreciate your time coming on. This is really great information. So here's my last question for you. New investor, just starting off, never invested in anything, let's say. What advice would you give to a new real estate investor that's just starting out?
And would this be through the lens of somebody using, retirement account funds? Is that how we should think about this?
I'd say either personal money. Let's say they've got a chunk of cash. They know they want to get into real estate investing, maybe rentals, for instance. What's that piece of advice?
Well, yeah, the number one thing is that you got to surround yourself with people that have achieved a level of success in that field, right? This is, can be used across whatever you want to accomplish, right? But the simplest thing that I've learned over the years is throw that ego to the side, right? If you want to learn something, just surround yourself with people that have already done it. And when you do that, do whatever you can to absorb that knowledge. When we were starting 10 years ago, we were very blessed to find a great team of mentors that guided us in our early years. And they still joke about it today, about how I was incessant and I was, always asking to take them out to lunch and to give them a call and all of this. And we joke about it now, but that's the way I was, because I knew that they had been there. They had been where I wanted. And so that is something that, I would really recommend, whether that is, in your local investor group, finding a mentor who teaches, real estate education, a little bit of a higher level as well. That's the route that we went down. Friends and family that have the right mindset, I should say. Take them out to lunch, ask them about it. Just by taking them out to lunch, that doesn't mean you're going to follow everything that they did. You might learn what not to do, right? Reading books is the simplest and easiest thing that we did. So, all of those things I think are really important. And then the only other thing, I know a lot of our listeners are clients of iPlan, just like myself. And as I'm thinking about how I started to unlock my retirement account to really take advantage of real estate, I remember there were a few different paths to go down. And, what I really learned was that it can be kind of difficult to get your first investments going. You probably are really excited about the account that's been opened, and, but then you see the possibilities, but then it's time to locate the deal or locate the investment for you, and that's where a lot of people get frustrated. I think what's really important is, when you have that idea in mind to open the account, it's going to be very helpful if your investment provider works really well with iPlan, because when there's seamless integration like that and they speak the same language, you're going to remove a huge obstacle. The reality is that self-directed IRAs are not as well known as we all would like them to be, right? So if you're trying to make an investment with somebody as a provider who's just not familiar with self-directed IRAs or hasn't had the blessing to work with Matt and his team, then you're going to be fighting an uphill battle, and people just don't speak the same language. So that's, I'm sure you can relate to that, Matt, right?
Definitely. Absolutely. So, wow, that was more than I was expecting. I appreciate you hopping on and answering these questions, Greg. You really opened up a lot and gave us a lot of good info. What, if people want to check out what you do, how can they reach out to you? What's your website or contact information?
Absolutely. Well, it's been a pleasure. Thanks for inviting me on. I'm glad this is, I was the guinea pig. That's pretty cool. I know anything you guys do over at iPlan is top quality. So, you'll have to invite me back for, the 500th podcast, right? I'm excited already for you for that one. For folks that want to learn more about what we do, again, the name of our company is JWB Real Estate Capital. You can find us on the web at www.jwbrealestatecapital.com. My name is Gregg Cohen. You can give our office a call at 904-677-6777. My team or I would be happy to help you.
Excellent. Thanks again, Greg. Everyone, thanks for joining us for the first ever iPlan Group podcast, and check on our podcast channel. As always, you can visit us at iPlanGroup.com to review any material you may have missed or you just want to go over again. On behalf of our guest here, Greg, and the iPlan Group team, thanks for joining us for our very first podcast, and we will be talking to you all soon. Take care.